Warren Buffett is arguably the world's most famous investor, and as one of the richest people on earth and a legend at beating the market, his strategies are kind of like the holy Bible for investors. But what I think makes Buffett especially interesting to follow is that he is always adapting and fine-tuning his strategies. And he'll openly admit when he's made mistakes and what he plans to do next to avoid it. I love that. So with everything going on in the world right now, I thought it would be a good idea to check out what moves Buffett has been making so far this year. And what better place to soak up his wisdom than at the Berkshire Hathaway annual shareholder meeting. So in today's video, I'm going to be looking at some of the big reveals from that meeting. But before I begin, I'd just like to thank the sponsor of this video, IG, a leading global trading platform. And to help seize the opportunities through the Australian earnings season, customers who apply for an IG share trading account will be able to trade Aussie shares from $2.50 until the end of August 2022. T&Cs apply, and if you'd like to find out more, I've left a link in the description below. Also, I'm sure you're well aware, but this is not financial advice. The strategies that Buffett uses himself may not be suitable for you at all. The big difference being that he has a lot of money. On to the video. One of the big reveals from the 2022 meeting was that Berkshire Hathaway had substantially increased its exposure to the energy, oil and gas market. We all know that the energy and oil prices have been going through the roof this year, thanks in part to Russia's invasion of Ukraine. Well, we now know Buffett probably expects this trend to continue. In the last quarter, Berkshire Hathaway had upped its stake in the US oil giant Chevron by a pretty big margin. And when I say big, I mean increasing their holdings from $4.5 billion in the previous quarter to $25.9 billion. That propelled the oil and gas company well up the ranks to be Berkshire's fourth biggest holding after Apple, Bank of America, and American Express. That move also follows Buffett's previous $7 billion buy-up of oil firm Occidental Petroleum, which he'd started buying up in increments from March of 2022. Warren Buffett might be known for great stock pickings, but he actually made a sizable chunk of his fortune in the early days through merger and acquisition deals, including, yes, the acquisition of Berkshire Hathaway. And he's clearly still got an eye on the space. Another big reveal from the latest meeting was that Berkshire had increased its stake in the video game firm Activision Blizzard as part of a merger arbitrage play. And if you're not sure what that means, it's basically where you take advantage of stock price volatility in the lead up to a merger or acquisition deal. In this case, Microsoft announced in 2021 that it intended to acquire Activision for $95 a share. These days it's trading for around $75, so if the deal goes through, shareholders, including Buffett, would make a very tidy profit. So essentially, Berkshire took advantage of the situation by increasing its exposure to Activision should the deal go through. The possibility of the deal failing is why stock prices are lower than the acquisition price. But even if Microsoft doesn't acquire Activision, Buffett believes in the company's long-term success anyway, having already owned a big stake in the company beforehand. And if you're looking for an opportunity to do the same, well, you probably noticed Elon Musk's offer for Twitter. If you were to believe the deal was truly going ahead, you could have bought up Twitter stock at a price below Musk's offer. And you could make a decent profit if it succeeds. This is definitely not financial advice, by the way. We don't know if it's going to succeed or not at the time of recording. While Buffett may have been on a buying spree in recent months, Buffett has also emphasized the importance of always having a good stock of hard cash. Though he recently reduced his cash holdings by more than $40 billion, at the time of the meeting, Berkshire still held $106 billion of cash assets in the Berkshire portfolio.
We will always have a lot of cash on hand. It's like oxygen, it's there all the time, but if it disappears for a few minutes, it's all over.
And it's even a point of pride for the investor. Berkshire was a major lender during the 2008 recession, offering capital to companies including Bank of America and Goldman Sachs.
We're better than the banks, and we'll give them the money if they need it.
Love that clip. Part of the way Berkshire boosts its cash income is to invest in cash-generating companies and by holding a strong portfolio of dividend stocks. In fact, a high dividend yield is one of the reasons Berkshire purchased stock oil firm Occidental, as Buffett explained in the meeting. Occidental pays a 13-cent quarterly dividend, and the company also said it plans to buy back about $3 billion of its own stock in the coming quarters. The The lesson here is to always maintain enough cash to at least cover emergencies and think about investing in dividend stocks along with your growth stocks. Warren Buffett is famous for his long-term investment approach in value companies rather than trying to profit by timing the market. It may be old news, but it's a strategy he continues to stand by, despite all of the volatility and global events in recent years. In fact, at the recent meeting, Buffett said not only did he not try to time the market, he also believed he wasn't very good at it. He pointed out numerous occasions where Berkshire Hathaway had missed good investment opportunities, such as during the pandemic.
I don't think we've ever made a decision where either one of us has either said or been thinking we should buy or sell based on what the market is going to do.
No.
Or for that matter, on what the economy is going to do. We don't know.
Buffett reiterated that his favorite approach continues to be picking good quality stocks that he views as undervalued. And if you want to learn more about value investing, I've left a link in the description below. One theme that Buffett often goes back to over the years is the importance of investing in yourself through self-improvement. When asked at the meeting what we should be doing to combat rising inflation, Warren Buffett said that the best protection was investing in your own skills. Become more of a specialist in your chosen field so that you can grow your income. It's also an ideal that he himself lives up to. Warren Buffett has been deeply interested in stocks from a young age, and he's described one of the integral moments as occurring during a trip to the New York Stock Exchange at 9 years old. By 11, he'd bought his first stock, and he spent the next decade experimenting with different investment styles, reading books on the subject, and perfecting his craft. By 20, he'd settled on the now famous value strategy, and he soon after joined a stock brokerage firm before launching his own firm. And the rest, they say, is history. This lesson is probably my personal favorite, and one of the reasons I believe Buffett is so well respected as an investor. The best strategy of all is to practice, stay curious, and perfect your craft. There aren't any shortcuts to that. If you're keen to learn more, check out the IG website and IG Academy for more great educational resources on how to invest. Well, that's it from me. If you like this video, please go ahead and hit the like and subscribe button. I've also left some links in the description if you'd like to check out some other videos and guides on the subject. Happy investing!